man, certain investments that you think are assets could quickly become liabilities in the wrong environment. So again, that peace of mind of paying something off, you can't calculate that.
Talk about the importance of diversification in a market like this, as well as liquidity and not having too much debt or being debt free. What of those three, walk us through why that's so important right now, that more than ever.
Yeah. Well, I mean, diversifying is your friend against not losing money. One of the most frustrating things was watching the 2011 to I'll call it really the 2018 market in precious metals, where, man, look at all this craziness going on, and gold just kept floundering, despite the fundamentals that, we've been looking at. Now we're starting to see things play out. But despite how certain you are about what the analysis should be, you have to be open to being wrong. And that's the importance of diversification. Even though I had certain ideas of how I expected things to play out, I didn't invest 100% in one way or another, because I'm open to the idea of being wrong. If I knew 100% something was going to go a certain way, why diversify? Right? What's the point? Just invest in what you think is going up 100% and do that. So the idea of being wrong and being exposed to different areas and changes in the environment is extremely important, especially as we live in an age where things are changing so fast, right? I mean, the FANG stocks, on paper, were extremely overvalued in 2019, representing large portions of the S&P 500, obviously the NASDAQ. But my goodness, going into COVID, the illness here, they got even bigger while the rest of the economy shrunk. People are on Facebook more, Netflix, Amazon. It just, again, things that you may not have anticipated. You're like, hey, these are way overvalued, but all of a sudden they get even more overvalued in a way, going up even more, with something you can't really anticipate. So you have to be open to being wrong. And I think that's the importance of diversification.
Yeah, I think it comes down to part of it's humility, right? And part of it's not having too much pride. And the part of it's just common sense. We don't throw all the eggs in one basket. We want to have diversification. That being said, I want to touch on this. So what we do at Capital Gains Tax Solutions is provide a tax deferral strategy called the Deferred Sales Trust, where people can sell highly appreciated assets. And then the beauty of it is diversify into non-like-kind assets. So for example, we just did a $7.6 million property in Georgia, and the gentleman has all of the money inside of a real estate deal, and he was going to do a 1031 exchange, but he goes, why do I want to just continue on that path, especially with COVID-19? Let me sell, pay off all my debt, go into the Deferred Sales Trust, and then he put it into hard money lending. And he's been sitting there for a while. And then in the bank too. He actually could have bought at the low, and we told him he could have got stocks, bonds, and mutual funds, but he decided not to, because he was concerned with what was going on, and he's kicking himself now. But that being said, moving forward, he's planning to put it with multiple commercial real estate deals, stocks, bonds, mutual funds, some stuff of his own. In other words, he's diversifying versus just selling one like-kind asset and buying one other like-kind asset of equal or greater value. So what do you think, with having that type of opportunity, what would that mean for an investor like that?
So again, it's all about taking that active. So there's also like this component of like active income where, this is part of my business. Some of my investments too, I feel is like operational. Like it's, this is how I make my money. This is active. This is, I might make a little bit, I might make a lot. It's a little more speculative. I'm aggressive. But then it kind of goes into the category of savings, right? And once it goes into that category of savings, I really want to protect it, in a way that's not in that active. Like it got into that savings category in my life, and now that's what I really want to solidify. There's that operational, do what you got to do. I mean, even the expenses for my business, I'll spend, a lot more money aggressively on things that are going on in my business. But then, we go out to dinner. I'm like, wait, what are we buying here? Or, you know what I mean? Like something stupid, right? You know, it's just my mindset is a lot more different when it comes to like operations. And then it goes into that savings category. Like I'm solidifying this gain I had. So that's the importance of it. And that's what I would say for people. Paying off debt is huge. And I think a lot of people going and looking at what happened during this illness realize that, you know, we went from just like things going crazy, you know, stock markets going up, people getting all these raises in this moat that people felt like they had around them that, you know, was largely unstoppable, just being taken out in an instant, you know, just the rug pulled out right from under them. And what a learning experience that was. And on paper, you know, it was like, okay, you know, you should always have a mortgage, you know, invest the difference. But man, you know, certain investments that you think are assets could quickly become liabilities in the wrong environment. So again, that peace of mind of paying something off, that's not, you can't calculate that return, that ROI. So, you know, just, and I'm fine with it. I have some debt and I use it in a way that I feel is appropriate. But, you know, being able to quickly pay it off or having a strategy, I mean, all these things are going to go towards you having peace of mind, which I think is, you can't calculate that sort of ROI. But, you know, using it wisely, I mean, there's nothing wrong with that, you know, and obviously I do hard money lending. I leverage other people up. So,
yeah. It's a place for all of it, right? It's a time to sell, a time to buy. There's a time to be in debt, time to be out of debt, right? A time to be maybe go a little more aggressive on spending, a time to save, right? So that's the point. It's having wisdom and having that mindset. And I like the idea of what you're talking about essentially taking what's active or something that you've built, and it's almost like it's harvest season, right? You've built this for all these years, and now you're going to harvest it. And you're going to retire the debt, right? And you're going to put it maybe more of the savings, right? So there's some emotional thing about that, right? And not just doubling down and losing it all, right? So I think if I'm hearing you right, but it's about retiring the debt, put it into savings, diversifying, and then at another time, perhaps is another time to launch that new thing. But of course, it depends on the season of life you're in. This gentleman, he's a baby boomer, he's older, he's done it for 30 years, you know, and he's just been through too many market cycles to be like, I'm not going to overpay for a 1031 property and have all my eggs in one basket and keep on all that debt. And his biggest thing was like, I can actually retire the debt now. I can be out of the debt and tax deferred.